The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Joining us now to further discuss the battered crypto markets is Joseph Kelly, CEO of Bitcoin financial services firm Unchained Capital. Welcome, Joseph.
Hey, y'all. Good morning.
So let's get right into it. I want to talk a little bit about this correlation between Bitcoin and crypto and the stock market, because this is just something that everybody's saying, okay, crypto's following the stock market, it's following tech stocks. Can you break down why that is? Because I don't think it's actually obvious why these two should be performing in tandem. Is it because institutional investors are also heavily invested in the stock market and now they're selling crypto to cover their losses? If you could tease out a little bit what this connection actually is, I think it would be very helpful.
Sure. I think it's part of the maturity and maturing process for Bitcoin as a financial asset. We have seen in the last few years a lot more mature and traditional and more sophisticated market participants enter the Bitcoin markets, putting Bitcoin on their balance sheet, trading it more actively. And so now it's really playing a role inside this global financial system, the global markets. You have $40 trillion or more in global equity markets. You have into the hundreds of trillions of overall market value across other assets. And so as there are sell-offs and liquidity events in that broader market, some of those same participants need to go for sources of liquidity, go for sources of cash. And Bitcoin is performing its role as a source of liquidity and source of cash in these troubling times for a lot of firms.
So is it fair to say that institutional investors are a big part of this story because, they are the ones who are selling to make up for the losses? Do we have evidence that that is what's happening?
I think there's definitely anecdata. I think there's less direct evidence that you could probably get people talking to, but I think there's enough there. And based on the volumes and the character of the people that have been public about getting into Bitcoin and the new entrants over the past few years, that it's a pretty safe conclusion to draw. There's multiple factors, a lot of things, a lot of individuals that also have equity portfolios that might be reaching to Bitcoin as a source for cash. So it's not always purely institutions, but across the board, both those groups are affected.
So in this last, in this most recent sell-off that we saw, where would you say what was the source of most of that selling? Do you think that it was institutions or it was retail that got spooked by the difficulties in the equities markets, let's say?
Hard to say. I don't get to get the privilege of reading cross industry order books and who's making the markets there, but I'd say it does probably lean in favor of institutions, just from my impression. While certainly I think everybody's been affected by a depressed stock market and needs for liquidity in the last 6 months.
I guess one question is, how does that explain the spillover into the altcoin market, though? I mean, I sort of understand this idea. We have a lot of institutions, buying Bitcoin, but why is Shiba Inu, why is that tanking as well? I don't think there's a lot of institutional investors in SHIB, for example. So could you explain why it's spilling over to the altcoin and why the altcoin market is so red as well?
I think you actually have had some institutions sort of eking out into those markets, into DeFi and these other yield farming plays or other areas. And so I think that those folks, they've been hit. Those are thinner markets. And so also as people need to exit them, there's going to be even more further downward price pressure. So usually those people are exiting those for Bitcoin, and then they want to exit Bitcoin to dollars, being the most liquid dollar market in the industry.
So what do you think the bottom is for Bitcoin?
I think the bottom is, I can't give price predictions. It could go lower. I do think in the low 20s could be rough, but it would be surprised if anything would south of there.
Overnight, we also saw the Terra Luna ecosystem take a bit of a burn. We're seeing that UST, their stablecoin, has been unable to recapture its 1-to-1 US dollar peg. What impact do you think that is having on the rest of the crypto markets?
I think it's a scary headline thing. I think it can cause questions and doubts and FUD about the broader cryptocurrency industry. I think it's one of the things that you kind of get to hold in contrast to Bitcoin as a much more sound, much more explainable asset, and that isn't kind of over-promising or trying to do things like maintain a dollar peg. So I think it's just one way that Bitcoin will continue to shine in the long run, and a lot of other assets and personal projects will just do what they do.
Do you think that they'll be able to recover their peg?
No clue. I think that's a really hard thing. I think I don't know if we figured out how to maintain pegs in traditional markets or the cryptocurrency world either. So really too many tail risks, too much. It's really difficult problem. I don't know, people can solve.
So we're seeing some inflation numbers come out tomorrow. What do you, if you could have a crystal ball, what do you think is going to happen? Inflation is going to be high. What do you think the impact will be on the market?
I don't know. I think probably a lot of the expectations are priced in. I think that any number they print is probably going to be south of still what people believe to be the reality. So it's just kind of this game of how much of a fiction is the number going to be versus what we, in the market, and what do we feel like the common knowledge is, like inflation actually is. So it's great that I think that more and more of the prints are getting closer, and that high single digits and maybe into the teens of inflation. But I think that's probably a lot of people are already expecting what's coming.